Good evening. A formidable top is formed on the USD-INR. This is the daily candlestick view at this new all-time high on the dollar versus the rupee, or say the all-time low on the rupee. The amount of screaming and howling that happened, all-time low, and the noobs, the neo-chartists, those who are into technical analysis in recent years, they screamed, buy the new high. But if every new high were to be bought, and if it was logical, any contract would go to infinity. And if any new low was to be kept on getting sold without applying any other filters, that contract should go to zero. It never happens. So what happened was this new high, this gap up caused this new high, and the following candle the next day was a spinning top candle as well as a tweezer tops. Identical highs on two consecutive candles after a run up. That was a warning signal. And this sell off here, the next day after that, broke this uptrend line. So, this uptrend is gone. This one is gone. And this uptrend is nothing but a WX and a Y wave. This WXY combined together forms a larger degree Z, X, this was a Y, X, and this is a W. So, starting all the way from here from 72, we have made a WXYXZ. That is the longest corrective pattern that can happen after howsoever many rounds of noodle soups a market may create. So this is it. This is it. I called it a top here with a prospect that we might get down to 72, and if that breaks down to 68, with a caveat that the possibility that one more leg of this corrective rally is possible but highly improbable. So the events in the world, the war immediately on the foothills of on the heels of the pandemic, and a war of this proportion where superpowers are involved rattled the world, and one more leg happened. But beyond this leg, if this market persists further, I should seriously review why the hell am I doing Elliott wave analysis anymore. Okay, I may not abandon it, but I will need to think this is it. Okay, now if this is it, what does this WXYXZ mean? And a new all-time high. If this is a corrective pattern, it is a corrective of what? It is a corrective of this initial decline. And what does this corrective going into a new high mean? That this long-term trend, this massive long-term trend that is going on, this is the weekly chart from this 2008, or even ever since I am born, or even ever since this country is born from 1947, this long-term trend is still intact. It is still intact. This sprint into a new high, which makes it an irregular B wave. This irregular B wave, all of this combined together make this B wave. And if it goes higher than the origin of A wave, it's an irregular B wave. How does that happen? It happens simply, if I can show to you, say a normal correction should be like an A, B, and a C wave. Okay. But if the ongoing thrust of the 50-year trend is so strong that the rebound within the corrective three-legged move combines with this ongoing long-term thrust, and makes this into an irregular B wave. Okay, that's how this pattern becomes. This new high becomes an irregular B wave, and this new high only reflects that wherever we shall end on the leg that has begun, whether at 72 or at 68, this was not the long term top of the 50-year decline that is going on in the rupee dollar. It's going to keep on declining over the next 5 years, much more. But the 5 year view is going to be triggered much later. Right now, if this was an A wave and this is a B wave, we may have now a 1, 2, 3, 4, 5, a very fast and a furious C wave getting down to this point. 72 is my minimum expectation. And as we start proceeding lower from the shape of these smaller waves that are going to form in between, I may be able to make an early revision without having to actually wait for 72 to arrive and break down. After a breakdown, naturally the level is 68, and 68 sounds absurd, but when rupee dollar had gone to 49 in 2008, that was an absurd expectation to make that from 57 will get down to 49. So तेजी मंदी की कोई लिमिट नहीं है, market कुछ भी कर सकता है. What is more important is if this is going to be a 1 2 3 4 5 wave, or we might have another leg of WXYs. Irrespective, we if this becomes a WXYXZ, it will be labeled a Y wave. This will become a WX and a Y. But if this comes in 1 2 3 4 5, we'll call it an ABC. So whether 68 or 72, and after that going back again through 2023-24 into $80 and $85 and $90, all of that will happen over the years. Now, this last leg of this correction that started here, A wave, B wave, and C wave will be the last leg of the correction. Uh, this last leg will be faster than this one, and it will be faster than this one also. The last leg of any larger pattern is the fastest one. So, if this took approximately 12 months and this took 12 months, I'm concluding this part of the video that I'm expecting the rupee dollar to get down to at least 72. And if that shocks you, I have to tell you that please don't feel shocked with 72. Please do not even feel shocked if it gets extended up to 68. And it's going to happen in less than 12 months. So, February 2023 or sooner, ideally sooner, it could happen in December or even in November, that we will get down to 72 or even 68. Now, one quick point here. In this entire history of the rupee dollar going from $1 to a rupee in 1947 and coming to $6 for donkeys years through the 1980s and to this area, the rupee dollar has depreciated by 70 times. The dollar has become 70 times more expensive. And if Sensex was at 100 in 1980, one can surmise approximately it might have been at 1 in 1947 on back calculation. So the stock market has become about 65,000 times in valuation from 1947, and the rupee dollar has become 70 times. So in the long run, a depreciating rupee and a galloping stock market are fine, but within which is hidden a treasure. The largest component of equities returns in this permanent 200-year-old bull market in equities. In the case of India, the largest portion of returns is bunched up during the time the Indian currency strengthens. From the mess of March 2020, the largest portion of the returns from 7,500 Nifty to about 15,000 odd came already by here. And then it took another year to get up to 18,000, and that was residual return. You can go back to any prior period of the rupee strengthening. The maximum component of the stock market's returns came during that period. So if I'm going to tautomerize this, and if I'm looking at just about 7% decline in the value of the dollar versus the rupee, approximately 2.67 times of that is the Nifty rise. 18,200 should not look difficult. And in case we head down to 68, be ready, Nifty might get down to even 21,000. All of it within a year. Now, each thing will play separately. The rupee and the Nifty correlation is to be only looked at as an academic thing. We'll focus right now on the Nifty trade. Keep your stop losses and do go short on the dollar. The market will never issue an invitation to make profits. We have to respect prices and move with them.